A growing number of analysts fear the effects of China's economic slowdown could be more serious than originally thought. It puts countries dependent on Chinese imports on high alert, and the latest data projects Korea will be the third hardest hit if demand from China continues to fall. Kwon Soa gives us the details.
China's imports fell 13.8% in August in dollar terms from the same month last year. That's a huge drop from July and a big difference from experts' expectations. China's exports also experienced a 5.5% drop last month. With China's trade figures continuing the downward trend, there are concerns that the already substantial impact on countries intimately tied to China could bring further dark clouds in their economic growth. China's imports were down 14.6% over the first 7 months of the year from the same period in the previous year. According to an analysis by The Guardian, if the level of decline stays the same for the rest of the year, New Zealand and Australia would be the countries hit the hardest, with their GDP expected to drop by 1.9% and 1.7% respectively. And Korea, which exports around a quarter of its outbound shipments to China, would be the third most affected country, with a 1% decline in its GDP and a loss of almost $13.9 billion in exports. China's devaluation of its currency has raised its price competitiveness in the export market. But for Korea, the move poses a growing threat to key export items such as ships, steel, and electronics. Experts say since Beijing's recent policies haven't shown any significant effects yet, there is a chance it could further devalue the yuan later this year, which means Korea will have to defend itself with new export strategies. Kwon Soa, Arirang News.